This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, February 3rd, 2015. Euro dollar. So the euro right now, it's a wait and see game, waiting to see where this consolidation will break. The market's been triangulating over the past several sessions, and it's going to take a break back above 14.23 or below the recent lows of this triangle at 12.65 to confirm a break on either end. A break above 14.23 will open the door for additional corrective activity and allow for these oversold technical studies to continue to unwind, while back below that recent low at 12.65 would open the door for a bearish resumption back towards the 11-year lows at 10.98 from last Monday. So that's the story with the euro right now. Ultimately, the market remains locked within an intense downtrend, even if we do see a break to the upside, and only back above the 50-day moving average would compromise the bearish outlook. Sterling dollar. So cable continues to consolidate off recent lows. The market had posted a fresh 2015 low at 49.51 and is very close to that 2013 base at 48.13 further down. Break below 49.51 will of course expose 48.13, while only back above 52.70 would compromise the immediate bearish outlook and take the pressure off, exposing previous support at 54.85 further up. Dollar yen. Dollar yen continues with its consolidation after breaking up to fresh 7-year highs in December. The market's been locked in a sideways chop over the past several weeks, although the overall trend continues to favor the upside, with a break above 21.85 favored towards 125 further up, and ultimately only back below 15.55, the low from the 16th of December, would compromise the immediate bullish outlook and give reason for a bit of a pause in dollar yen. Euro Swiss. So Euro Swiss has broken out from a 97.10 to 102.50 range, and that had opened the door for a measured move upside extension towards 107, and we're well on our way with the market recently breaking up close to 106. Ultimately now, any setback should be very well supported by previous resistance at 102.50. Aussie dollar. So with Aussie breaking down on Tuesday, it's a fresh 6-year lows. The monthly chart becomes relevant, and if we look at the 2008 low all the way up to the 2011 high, this extreme move, the next key support comes in the form of the 71 area, which is the 78.6 fib retracement off of the 2008 to 2011 move. So this is where this market could be heading over the coming days and weeks. Of course, with daily, weekly, and monthly studies oversold, there is room for a correction to the upside towards the 80 to 82 area, but those rallies should be very well capped. Dollar CAD. Dollar CAD had recently broken up to fresh 6-year highs up towards 128 ahead of this latest minor pullback. The market is going to be focused on retesting some resistance from a few years back at 30.65 higher up, but until then the market is in the process of unwinding from overbought studies and is at risk for a more immediate retest of the 10-day moving average around 125, but ultimately any setbacks in this market should continue to be very well supported in favor of a higher low and fresh upside extension. Kiwi dollar. Kiwi has recently broken down to its through its next measured move objective at 72. The market had been consolidating in about a 400-point range between 76 and 80 before breaking down below 76 earlier in this month, or in mid-January, to trade all the way down now, most recently to that 72 measured move objective. Of course, now 70 comes into play, the next major psychological barrier, but again, daily studies are a little bit stretched here, so there is risk for a bit of a rebound, but ultimately the rebound should be very well capped in favor of a lower top and bearish resumption in this market. Ideally, the market should find a lower top somewhere in the 73 to 74.50 area. SPX 500. The S&P 500 continues to show signs of the formation of a major top, but it's taking its time and continues to sort of be very well supported towards dips on dips below 2000. Ultimately, only back above 2070 would negate or delay the topish outlook, while a break below 1968, the low that we saw on the 16th of December, is required to open the door for an acceleration to the downside back towards the October base at 1820. Gold. Gold is interesting when you look at the weekly chart. The market is showing signs of a major base after breaking above 1256. 1256 in the 1250 area should now act as a good, formidable previous resistance, now turned support zone, in favor of a retest of the next key resistance in the form of the July peak at 1345. Ultimately, only back below 1250 would delay this outlook and stall the recovery attempts towards 1345 further up. That's all for today.